Hey guys, welcome. Today we're going to discuss Google and why I believe this company has so much potential in this current market. Now, this is a company that has recently become one of my largest holdings because I believe it is undervalued. I currently own about $11,000 of this company in my public portfolio. Google is a business that I've owned for a long time, but only recently has it become my second largest holding. So, what do I see in Google, and why have I dramatically been increasing my stake in the company? I believe Google is undervalued and has a strong chance for ample upside because of the simple valuation metrics. Before this most recent move, Google was trading around a price to earnings ratio of 20, while competitors like Amazon trade at 50, Meta at 30, Microsoft at 37. Even the QQQ trades at a price to earnings ratio of 38 and the S&P 500 at 26. So it is fiercely undervalued when compared to these companies and indices. When I see a dominant, superior company like Google trading at such a cheap valuation, it piques my interest. So why is Google down so much? Why are they so overlooked by investors? This can be attributed to a laundry list of factors, but two main points stand out. First, Google released its Q2 earnings report in July. Although the company beat revenue and earnings expectations, many investors were concerned with its high capital spending, which came to $13.2 billion, $1 billion above forecast. This increased spending was mainly due to the company's artificial intelligence efforts, which sparked concerns about the potential payoff. I largely agree with the investment into AI, so after this initial decline, I started increasing my position. Now, late November of this year, the US Department of Justice pushed for Google to sell off its Chrome browser as part of an antitrust lawsuit. This is the second reason I believe investors have been so skeptical. The DOJ is arguing that Google's dominance in the search market creates an unfair monopoly and must be broken up. This antitrust lawsuit could drastically change how Google operates, even if the Department of Justice doesn't succeed. Additionally, the announcement of OpenAI releasing a test version of its search engine, SearchGPT, added to the crockpot of worry. Investors are apprehensive because they believe that these LLMs, like ChatGPT and Meta's Llama, are going to take away market share from Google search. But the biggest problem that these critics run into is that we don't see it in the numbers. We don't see Google's search platform being interrupted. Google search revenue is up 12% this year. And if this disruption is going to happen, when? When is it going to happen? Is it going to happen in 2025? These large language models have been out for years now, and I don't see the crisis it's causing Google. ChatGPT has been out for 2 years, has over 100,000 users. Still, Google is growing its search revenue. I understand that during this time period where Google is facing lots of regulation and scrutiny, investors are trying to comprehend what this will look like over the upcoming years. These are causing the stock to be heavily discounted. Google is being treated as though it's a company in outright distress, a company that is a brewing catastrophe. When I look at it and impose my best judgment of the situation, I don't think the damage will be quite as awful as what investors are pricing in. Furthermore, I believe that Google is a company that has created an exceptional moat for themselves. They also have a lot of experience dealing with changes, dealing with endless competitors. There have always been a multitude of places to get information, and Google somehow leverages all its different businesses and utilities to help each other, creating this incredible search algorithm we all know and love. Think about it. How many times have you gone on Microsoft Edge or Apple Safari just to download Google Chrome? I think this is a company that can overcome all the challenges it faces. So, if my overall assumption is correct, this company is absolutely undervalued and has the potential for a 50 to 70% return over the course of the next year. Many investors are avoiding Google because they are concerned about its future, but I believe the risk to reward is still positive, especially because this company is more than just Google search. For example, Google's cloud business has grown from about 7% of Google's total revenue to more than 11% in the past 3 years. So the cloud segment of business, which faces no DOJ lawsuit, is a healthy, profitable source of revenue. Not only is it growing as a percentage of Google's total revenue, it's also growing in its operating margins. This is important because it shows how skillfully Google is being managed and how efficiently it can generate profit. If you account for every other part of Google's business besides Google Search, like YouTube ads, Google Network, subscriptions, and Google Cloud, they are growing by about 19%. To put that in perspective, the aggregate of Google's other businesses are growing more quickly than Google Search. Every quarter, these segments of business are contributing more and more to Google's total revenue.